Well, welcome back to Financial Accounting, everybody. The purpose of this little video lecture is to review the take-home part of exam number 1. So you all got your exams back. So on the first page, you saw your total number of questions correct for the multiple choice divided by 40, gave you a fraction multiplied by 50. That gave you the number of points on the multiple choice. And then there were 5 take-home questions, and each of the 5 take-home questions was worth 10 points apiece. So let's go through them. Most of you did pretty well on these things, but we'll go through them. And there may be some other stuff to learn here. So here we go. Okay. So on this one, I'll add commentary where things that I noticed when I marked them all. To get full credit on this, you had to put these in general journal format. And general journal format means you show the date, you show the debit, you indent, and you show the credit. So these are your transactions here. Purchase $6,000 of merchandise on account, terms 210 net 30. What that means, if the full amount is due within 30 days, if you pay within 10 days, you're entitled to a discount. Of that inventory that you purchased, you returned 1,500 of it. So you got to record the reduction of inventory and the reduction of accounts payable when it's returned. You got to record cash sales for the week, and you also have to record, since we're using a perpetual inventory system, you have to also record the cost of goods sold. And then on August 10th, you sold merchandise on account for a local breeder for the pet shop. So we sold merchandise on account for $500, terms net 30. Cost of the merchandise was $200. So again, you got to record the sale and you got to record the cost of goods sold. And then on August 11th, you got to pay for the purchase of August 1st. Now, the purchase of August 1st originally was $6,000. You returned 1,500 of it. So actually, when the amount you're going to pay, you're going to reduce accounts payable by $4,500. And you're going to take a discount. You're going to take a discount not on the full $6,000. You're going to take a discount on the remaining $4,500. And then on August 30th, made payment on account for the sale of August 10th. So you're going to retire the, you're going to record the receipt of cash from a customer on account. Okay, so with that background, here's the transactions. So the first one is a debit to inventory and a credit to accounts payable, which is for the purchase of inventory. Next one is the purchase return, which is a debit to accounts payable and a credit to the inventory. Next one is the sale, a cash sale, so a debit to cash, a credit to sales, and the sales was for $9,750, but you got to also record the cost of the sale. So you're using a perpetual system, so it's a debit to cost of goods sold and a credit to inventory. August 10th, you had a sale of $500 on account, debit accounts receivable, credit sales. And you have to record the cost of the sales, so it's a debit to cost of goods sold and a credit to inventory. And then on the 11th, you paid for the stuff that you bought on the 1st. You bought $6,000 worth of stuff, terms 210 net 30, so you're entitled to take a 2% discount. But you returned $1,500 on the 3rd, so the amount that you're retiring is not $6,000, it's $4,500, and you're entitled to take a 2% discount. And a 2% discount on 45 is 90. So it's a debit to accounts payable, a credit to cash, and a credit to inventory. So what happens is the purchase's discount ends up being a reduction in the cost of the inventory. And then the last one is to record simply the receipt of cash from a customer on account. So you debit cash, you credit accounts receivable. So again, to get full credit on that, you got to show the debit, you got to show the credit, and you got to do it in proper form. Proper form doesn't, if it looks like something other than this, if you gave me some type of wacky table or something like that, that's not proper general journal form. This is general journal form. Get used to this. If I ever ask you to do journal entries again, which you know I will, make sure you put them in this format. All right, second one. So this had to do with a periodic inventory system. So I made it easier. The perpetual one can be quite tedious at times. So a periodic system means that you're going to record all the purchases, and when you record the actual sales, what you're going to do, you don't have to actually take a look at the inventory at the time of the sale. You can go back and assume that all these items that were purchased during the year were available throughout the full year. So what you basically do is you just got to focus on the cost of goods sales, the cost of goods sold here. So you start with, depending upon what method you use, you either start at the beginning if it's FIFO, or you start at the end if it's LIFO, or you use an average if it's weighted average. So let's take a look at it. Assuming that the business maintains a periodic system, determine the cost of goods sold and ending inventory using the following methods. Okay, so first we're going to use FIFO. So FIFO assumes the first goods that came in were the first goods that you got rid of. So you're going to get rid of these 24 units at 10, then you're going to get rid of these 26 units at 12, then you're going to get rid of these 18 units at 15. So what's going to happen every time you make a sale, you can only, however, account for the units that you actually had at that price. So the first sale that we had here, we sold 26 units on 36 units on the 14th. So 36 units, you only had 24 units at 10. So you have to now take 12 units at 12. So there's your cost of goods sold, 224 times 10 and 12 units times 12. Okay, and then on the 25th, you had another sale of 20 units. So the other sale of the 20 units, you've only got 14 units available at the 12. So then what you have to do is you actually got to start to get into the next level there, which is at 15. So you got 6 units at 15. All right, so there's your cost of goods sold, 56 units and 642. And then the units that are available for sale, you're going to have 12 units at $15, which is 180. So that's under FIFO. LIFO, you're going to do just the opposite. You're going to start at the end. Okay. So here, so when you try to figure out your sales, you're going to go to your most recent purchases. So 18 units at 15. So you sold here on the what is it here? Yeah, on the 14th, you sold 36 units. So if you sold 36 units, you only had 24 units. You only had 24, actually, yeah, you only had 18 units rather at the $15. Right, so it's 18 units at 15. So the other 18, you've got to go back to the next most recent purchase, which is at $12. So it's 18 at 12. And then the next sale, you had 20 units, and you got to go back. Again, you're working your way backwards here now. You only had 8 more units left at 12, and you had 12 units at 10. So here's your cost of goods sold, 702, and you have 12 units that are available, and there was 12 units at the original $10, which is back from the beginning inventory. So you got a very different answer for FIFO than you did for LIFO because prices were changing. And then to get the weighted average, what you simply do is you simply take the total goods available and you divide by the number of units available. So 822 divided by 68 gives you a unit cost of 1209. So you cost of goods sold is 56 times 1209. And then you got the ending inventory of 12 units at 1209. So you got cost of goods sold of 677 and ending inventory at 145. Okay, most of you did real well on that one. I don't think anyone got that wrong. Okay, next one was pretty simple. What we wanted you to do is you wanted to estimate the value of the ending inventory under the retail method. So you had to get the relationship between the cost of the merchandise and its retail price. So the relationship is if you take the cost, you had to figure out that obviously if this is the beginning inventory and that's the merchandise available for sale, that must have been the purchase of 68. Okay, and you know if this was the at retail, if you know what the beginning inventory was, you know what the purchases were, then you could figure out what the total merchandise available was for retail. So what you're doing here is you're getting the relationship of cost to retail for the total merchandise available, and that is 70%. So if you take the retail, the inventory at retail, you subtract out the sales for October, that would give you the value of the inventory at its retail price, multiply that by the cost ratio, which is 70%, and you get 17,738. And the fourth one here, you got to do a bank reconciliation. So bank reconciliation's got to have, now some of you, I put format here because you really needed to set it up and you needed to show the bank reconciliation showing the balance per the bank and then the balance per the company's record. So the balance according to the bank, you've got to add to that the deposits on transit. You got to subtract out the outstanding checks. There's your adjusted balance of 4,995. And then the balance per the company's books was 5,080. You have to subtract out the bank service charge and the error that we made in recording one of these checks. So there is your bank reconciliation. Now, to get full credit on this, you had to show the adjusted balance. So you had to start with the bank balance according to the bank statement, and you had to get the cash balance according to the company's records. Right. Now, I didn't ask for it, but what you would have had to do if I had asked for it, and some of you went ahead and did this, which is fine. I didn't obviously penalize you for doing extra work here. If I had asked for the journal entries, what you would have done is you would have adjusted the balance per our books was 5,080. We need to reduce that by $85, and that would be a debit to the service charge and a debit to whatever error that what we made in terms of recording that request. I think it was supplies expense. So there's your bank reconciliation. And then the fifth one here, this is, there was quite a lot of different interpretations of this question. So what you were asked to do was A, figure out the amount that's estimated to be uncollectible. B, figure out to journalize the entry if you had a credit balance in allowance for doubtful accounts of 9,700. And C, what if you had a debit balance in allowance for doubtful accounts of 9,700? So the first thing we had to do here is we had to get our estimate of the uncollectible accounts. So some of you made just errors in terms of doing your multiplications here. So these were the balances. These were the like probability it would prove to be uncollectible. So you apply these various percentages to the balances, and what you come up with is our estimate of the uncollectible accounts is 30,110. That's the answer to A. And then for B, we said assume that there was already a credit balance of $9,700. So what you want to do is you want to bring the balance up to 30,110. It's already got 9,700 in there, so you're going to debit bad debts expense 20,410 and credit allowance for doubtful accounts. And in part C, we said let's assume there was a debit balance in that account of 9,700. So your adjusting entry here, you're going to have to debit the bad debts expense for the 30,110 plus the debit balance that you had here in 9,700. So it should be a debit to bad debts expense and a credit to allowance of doubtful accounts. Okay, so I hope you found that review useful. Again, most of you did pretty well on the take-home part of the exam. So keep up the good work on that. You will likely have a take-home for the third exam as well. But please don't underestimate the advantage of spending more time practicing and getting ready for the multiple choice. So I'll say again, I strongly recommend you do the adaptive exercises for each chapter. I strongly recommend you work through the multiple choice questions in the Let's Review of each chapter. And I strongly recommend you go to the on the Brightspace page, there is a section there where you've got additional practice multiple choice questions. Okay, so until next time, adios, au revoir, hasta luego. Have a great Thanksgiving, and we will talk to you soon, actually in about a week or so. Take care, folks. Bye-bye.